10 American cities are watching their luxury housing markets implode in real time, and the damage is severe. Sellers are dropping prices by six figures. Homes are sitting vacant for 180 days or more, and insurance costs quadrupling overnight. On top of that, foreign buyers are vanishing completely, and tech billionaires are relocating to zero-tax states. One West Coast city just saw luxury sales drop 60% in a single year. If you're thinking about buying or selling high-end property in any of these cities during this luxury real estate crash, you need to see these numbers first. Let's start with the first most affected city. Number 1. San Francisco, California. This is ground zero for urban collapse in America. Home values dropped 3.8% annually. Median luxury prices fell an estimated 10.9%. Some luxury condos in downtown are selling at 2015 prices, completely erasing a decade of supposed gains. This isn't just a market cycle anymore, but a fundamental restructuring of what the city represents. Office vacancy rates hit record highs as tech companies went remote or relocated entirely. Major retailers fled the city center, leaving downtown feeling like a ghost town. The tech companies that defined this city's identity are gone or massively downsized. The billionaires and millionaires who fought bidding wars for these homes moved to tax-friendly states and aren't coming back. Data shows nearly 1 in 5 sellers taking a loss on their sale. Luxury property sales volume plummeted, with some quarters recording drops over 30%. Active listings are piling up because the wealthy buyers vanished. The tech boom that created this market reversed violently and completely. Quality of life concerns accelerated the exodus. High crime, visible homelessness, and deteriorating infrastructure pushed wealthy residents out faster than anyone predicted. The doom loop is real, and it's accelerating. People leave, tax revenue drops, services decline, more people leave. This luxury real estate market went from invincible to toxic in under 3 years. If you're holding property here, you're watching equity evaporate in real time with no bottom in sight. Number 2. Dallas, Texas. Just a few hours north, another Texas market is stalling hard. Home values fell 3.9% annually in Dallas, part of a general slowdown from excess inventory. High housing supply is exceeding buyer demand growth by a massive margin. This is another casualty of the pandemic building boom that assumed demand would stay elevated forever. The luxury market here has hit a wall. Sellers are cutting prices aggressively. Buyers are sitting on the sidelines waiting for further drops. The inventory pileup is creating a standoff where nobody wants to transact at current prices. The same forces crushing Austin are hitting here. Oversupply, evaporating tech money, and buyers who realize that paying premium prices for Texas real estate doesn't make sense when the market is clearly falling. The difference is this market never had the extreme boom that Austin experienced, so the crash is happening in slower motion. But make no mistake, values are dropping and the bottom isn't in sight yet. Now let's head to Florida, where the collapse isn't just about prices, it's about survival. Number 3. Tampa, Florida. The Sunshine State is turning into a financial black hole for luxury homeowners, and this Gulf Coast city is ground zero. It registered the biggest annual price decline among top 20 metros. Home values dropped 2.4% year over year. Luxury homes down 1.7%, with inventory up over 25%. But here's what makes this market especially brutal. Insurance. Homeowners' insurance premiums have tripled or quadrupled. Policies that cost $5,000 annually now hit $15,000 or $20,000, and that's if you can even get coverage. Multiple insurance companies pulled out of Florida completely. Homeowners are scrambling to find anyone willing to insure their property. Some are forced into state-backed insurance that costs even more and protects less. So you've got falling home values, plus skyrocketing insurance, plus a post-pandemic reality check. The overbuilding made it worse. Developers threw up luxury condos faster than the market could absorb them. Now all that inventory sits while sellers panic, slashing prices just to escape the monthly carrying costs. The insurance nightmare here is just a preview of what's happening down the coast in an even more expensive market. Number 4. Miami, Florida. About 4 hours south, the luxury collapse takes on an entirely different character. Home values dropped 4.7% year over year. Luxury sales plummeted 19.4%. Luxury homes take a median 140 days to sell. That's nearly 5 months of carrying costs with zero buyers in sight. The real story here is the condo crisis. After the Surfside collapse in 2020-21, Florida passed new safety regulations requiring major structural inspections and repairs. Special assessments are crushing owners with six-figure bills showing up in the mail. You own a luxury beachfront condo one day. The next day, you owe $200,000 for foundation repairs with 6 months to pay. People are panic selling to escape the assessments, flooding the market with inventory. Luxury condo inventory hit its highest level in years. The cash buyers from South America who used to prop up this market are struggling with currency devaluation and buying far less than before. Insurance costs exploded here too. Waterfront properties that cost $8,000 annually to insure now hit $25,000 or more. Monthly carrying costs became unbearable even for wealthy owners. Wall Street South attracted billions in investment, but the party's over. The cleanup bill is coming in the form of depreciating assets and costs that never stop climbing. Florida's collapse is driven by insurance and regulations, but out west, it's pure economic devastation. Number 5. Phoenix, Arizona. This desert city topped the list for highest percentage of listings with price cuts of 31% overall. In the luxury tier, it's even worse. Sellers are chasing the market down every single week, dropping prices desperately trying to attract buyers who aren't coming. During the pandemic, prices here nearly doubled as remote workers fled expensive cities. Institutional investors bought heavily, assuming prices would keep climbing forever. Now those same investors are offloading entire portfolios, adding massive supply to an already saturated market. The desert heat isn't the only thing burning homeowners anymore. Investor activity collapsed completely. The pandemic migration reversed hard. More people are looking to leave than move in. Luxury homes that sold in days now sit for months without a single offer. Some recent buyers are already underwater, owing more than their homes are worth. The Sunbelt boom turned into a Sunbelt bust faster than anyone predicted. This market led the way up during the pandemic, and now it's leading the way down. And speaking of dramatic reversals, let's head to the Mountain West. Number 6. Denver, Colorado. High in the Rockies, another pandemic darling is experiencing freefall. Home values dropped 4% annually, with nearly 33% of listings showing price cuts. That's 1 in 3 sellers forced to reduce their asking price just to generate interest. High inventory pileup shifted this market decisively toward buyers. The pandemic boom brought floods of remote workers who pushed prices to unsustainable levels. Now that remote work is reversing and companies are demanding employees return to offices, the demand evaporated while supply kept climbing. Sellers who bought at the peak are watching equity disappear week after week. The mountain lifestyle appeal can't overcome the financial reality of falling values and rising carrying costs. At high altitude, thin air makes it hard to breathe. In this real estate market, thin demand makes it impossible to sell. But if you think the mountain collapse is harsh, wait until you see what's happening on the coast. Number 7. San Diego, California. Welcome to Southern California, where paradise comes with a price tag that keeps dropping. Luxury home sales here declined 15.8%. Typical home values dropped 0.46% month over month, which might sound small until you realize that adds up to over 5% annually in a market where homes cost multiple millions. High cost plus high interest rates froze an already unaffordable market at the top end. This city has always been expensive, but now it's expensive and falling. That's the worst combination possible for sellers. Luxury buyers are refusing to transact at current prices when they can clearly see values declining. Why buy today when the same house will be 10% cheaper in 6 months? Inventory is climbing steadily. Days on market keep extending. Sellers are realizing they missed their exit window. The wealthy buyers from Los Angeles who used to drive luxury demand here are dealing with their own market collapse and can't justify second homes anymore. The spillover wealth that propped up this market has dried up completely. And speaking of Los Angeles, that market has its own unique disaster we'll get to. But first, let's head further north to Silicon Valley. Number 8. San Jose, California. Here's where the tech wealth concentration created the most expensive real estate in America, and now it's experiencing the largest luxury sales decline in the entire country, down 24.4%. Nearly a quarter of the high-end market vanished in 1 year. Home values dropped 1.1% overall, but the luxury tier got absolutely destroyed. This is Silicon Valley headquarters, the place where tech billionaires and millionaires bid against each other for properties, creating the bubble of all bubbles. Except now, the tech sector is in full correction mode. Layoffs at Google, Apple, Meta, and dozens of startups gutted buying power overnight. Stock compensation packages that used to fund $3 million home purchases are now worthless as share prices cratered. High interest rates made everything worse. Jumbo loans for luxury properties now carry rates that make the monthly payments obscene, even for high earners. A $2.5 million home at 7% interest costs over $16,000 a month just in principal and interest. Add property taxes and insurance, and you're pushing $20,000 monthly. That's $240,000 a year just to own the house before you spend $1 on maintenance or improvements. Buyers did the math and walked away. Sellers are stuck holding properties they can't move at any price. The tech wealth that created this market is relocating to Austin, Miami, and other tax-friendly states, ironically contributing to the bubbles in those markets that are now also bursting. This city is learning the hard way what happens when your entire luxury market depends on one volatile industry. But if you think the Silicon Valley crash is bad, just wait until you see what's happening in our north. Number 9. Austin, Texas. Another victim of the collapse is a city that became everyone's pandemic fantasy, but turned into a financial nightmare. The numbers here are brutal. Annual list price decline of 4.9%. Nearly 1 in 3 listings has a price cut. Sellers are slashing prices by $50,000 or more just to get showings. During the pandemic, people flew in from California with cash, waiving inspections, buying sight unseen. Prices jumped 50% in under 2 years. Everyone thought they were geniuses. Now the inventory explosion is crushing the market. Builders constructed thousands of luxury homes assuming tech workers would keep flooding in forever. They didn't. Tech layoffs hit hard. Return-to-office mandates forced people back to California. That massive surplus of high-end homes now has nobody to buy them. Days on market tripled. Homes that sold in a weekend sit for months. Some 2022 buyers are already underwater. This city went from hottest market in America to leading the nation in price declines. You bought at the peak, you caught a falling knife, and if you think one Texas city collapsing is bad, the entire state is feeling the pain, just like you'll notice with our next city. One more market left, and this one combines the worst of everything we've seen. Number 10. Orlando, Florida. Our final stop takes us back to Florida for a market that checked every box for disaster. Home values dropped 4.3% year over year and made the list of cities most vulnerable to a 20% price decline in the near future. High inventory, affordability pressure, and rising insurance costs created a perfect storm here. But what makes this market unique is its dependence on vacation homes and investment properties. The short-term rental market that drove luxury demand collapsed as booking rates fell off a cliff and regulations tightened. Investors who bought luxury homes planning to Airbnb them are now stuck with empty properties and massive monthly costs. Some are trying to convert to long-term rentals but can't find tenants willing to pay enough to cover the mortgage. Others are panic selling into a market already flooded with inventory. The insurance crisis hitting the rest of Florida is just as severe here. The vacation rental income that used to offset the insurance costs has disappeared, leaving owners trapped between falling values and rising expenses. This market was built on speculation, and when the speculation stopped, everything collapsed.